The COVID-19 pandemic isn't behind us, but economies around the world are recovering from the crisis. At the same time, inflation concerns are rising. Here are 4 things that should influence your investment decisions in the coming months.
The global economic recovery will broaden and deepen in the coming months. In the US, various fiscal stimulus packages will drive consumption, while in Europe and China, the recovery will be driven by production and investment.
And with that, Julius Bär believes that there's further upside for equities, although in a more muted way after the strong gains in the past 12 months. Defensives are likely to make a comeback, with healthcare our most preferred sector. But don't be short on innovation either. Selective exposure to information technology, small caps, and financials is also important.
China remains key within emerging markets, although India has now also come through as a contender for investors looking to diversify regionally.
Pent-up demand is only part of the consumer boom we're expecting to see in coming months. In the US especially, fiscal stimulus, coupled with increased vaccinations and the lifting of lockdown measures, will see consumption skyrocket.
Positioning yourself to make the most of the situation is really important. We remain overweight small cap stocks as they usually outperform in periods of expansion. But even during economic boom, markets can be bumpy, so selection is key.
And it would be wise to include some alternative investments like hedge funds, private equity solutions, as well as structured products to balance your portfolio.
Increasingly, we're making the choice to shift to more sustainable investments. It's easy to see why. During the pandemic, those companies with strong environmental, social, and governance backgrounds were more resilient and had more stable balance sheets. Going forward, this tells us 2 things. 1, that we expect more companies to take ESG seriously. And 2, that investors will have a bigger universe of meaningful companies to choose from.
There are opportunities for sustainable investments across many sectors, especially our Julius Bär next generation topics such as future mobility. And we should also keep an eye on organizations that weathered the pandemic successfully. They were more flexible and able to respond better to changing client needs and market developments.
More and more companies are adapting quickly to the new demands of our economies. For example, traditional software and PC companies have moved into cloud computing and servers. And as adaptive companies, they will continue to reap the benefits of their structural advantage.
As we look to the horizon, we do see brighter times. An expanding economy will have its ups and downs, but there is plenty of opportunity ahead. And as we believe that the equity bull market will continue for some time longer, staying invested remains key.